So what is an asset? So today I thought I'd talk to you about what is an asset. Now an asset, that is the question. My name is Jacques, this is Practitioner Accounting Services, and today I'm quickly going to explain what an asset is. So if you're new to my channel, please hit the subscribe button, I'll appreciate that. Please hit the notification bell. You will find information and videos on what is accounting, topics within accounting, topics within tax, as well as certain just guides and comments on how to run your business. So feel free to do that. Today's topic, an asset. What is an asset? Now, the easiest for me to explain that is to go back to the International Financial Reporting Standards definition of an asset. And there's a couple of criteria, or at least a couple of aspects that makes out this definition. The definition basically says that an asset is a resource under the control of a company that exists as a result of a prior occurrance, and from which it is expected that future economic benefits will flow towards the company. Now these are a lot of big words. For the layman, what does these mean? An asset is a resource such as your car, vehicle, resource. Number two, that exists as a result of a prior occurrence, or something that happened in the past. Now, the company physically went and bought the vehicle, so therefore the company owns the car, right? So the day they bought the vehicle, they signed the contract, that day, that's when the occurrence happened, that was the occurrence, they bought the vehicle. For example, let's take a building. The company the company purchased the building. They signed a purchase agreement and offered to purchase order. They got finance from a bank, whatever the case may be, but they purchased the property, and that is the previous occurrence. It has to be something that the company did, right? Then the next option is that's under control of the entity, and that is why a lease, for example, a lease of a vehicle or the lease of a building, is not considered an asset, even though it makes it easier for an entity to get another lease on a new company or a new company vehicle, office, or whatever the case may be. If they have a bond already, or if they have finance, or if they have lease, it might be easier, but the fact that they do have that doesn't mean that the lease itself is an asset. Why? Because the building, the car, these items are not under the control of the entity, they're under the control of the owner. Now, in some rare cases, a company might be the owner of a certain property or a certain vehicle or asset. However, the implication might be that the company is not in control of the asset. And this happens especially in consolidations, in companies, where companies own, for example, a majority share in a business, but another company could, appoint 70% of the board of directors, for that matter. Then essentially the company that can appoint 70% of the directors, they're essentially the controlling company. And then the majority shareholder literally doesn't have control, which is why that company will then not be consolidated into this company. The company will not, the subsidiary company will not be consolidated towards the majority shareholder. The company would not be, they would not be considered an asset. The only asset would be the cost involved in their purchase of the 51%. So the control of the actual asset plays a very large role in determining whether the asset is in fact an asset or not, right? In some cases you might argue that the company owns the car, and therefore but the company has drivers, and the drivers are the ones physically controlling the car. true, but the company still gets to choose who the drivers are. Those drivers still have to be compliant with certain company regulations, right? The driver have to have a driver's license. The driver have to be, he signs possession of the vehicle, therefore he signs responsibility of the vehicle. The company still pays insurance on the car. The company does the maintenance. So all the costs and benefits of the ownership of the asset, control of the asset, is still in the control of the company, and therefore the company still is in control. All right. So that's why control is a very important factor in the definition. Right, here is the last portion. So we've talked about briefly, it's a resource, a car, a vehicle, building, cell phone, whatever the case may be. Not really employees. Employees can be considered an asset, but it's very difficult to value that. But so we've spoken about the actual asset itself, the resource itself. We've spoken about it having occurred being as a result of the relationship between the owner and the asset, is there was something that happened in the past. We've mentioned that, and I've elaborated a bit on control. So the final definition aspect or criteria for an asset is, now the big words are, from which it is expected that future economic benefits will flow towards the entity. What does that mean? It pretty much means that the company will make money, right? The company will make money off of the use of this asset. The use of this asset is, it could be whatever. It could be a delivery vehicle, it could be a courtesy vehicle from a dealership. Now I'm just driving past the dealership, so thought about that. It could be the building from which the company runs its operations from. It could be a warehouse. It could be the internal telephone network or the computer network. It could be the computers for that matter. There's a lot of things what the asset could be and what the company could use for it. But it is expected that while they are using this asset, that the company will make money, right? So another very good example of future economic benefits would be an investment property. But if you buy an investment property, let's say for example you buy a vacant plot of land, and you don't expect to do anything with this vacant plot of land, and eventually this whole land appropriation or expropriation without compensation policy of government comes into play, what will happen eventually is that asset will be derecognized. It will just be taken away. And in such a case, this vacant plot of property will not be, there will be no future economic benefits flowing to the company. There will be no money coming into the company, and as a result then the company will not be making money out of it. But however, should you build on top of this vacant piece of land, right, and you get a government grant, for example, or get some kind of government contract funding to develop this property, which is then transferred to government, or government buys it then, and say it's RDP houses, for example, then you've done something with the property and you've sold the property. Or you buy a vacant piece of land in any place, or buy a property, break down whatever buildings are on there and build a block of flats. Then the future economic benefits of all of the money that you're throwing into this building of these block of flats, the future economic benefits will be the rent, or if you put in tenants, or if you sell the individual flats, the sales purchase, or the purchase price. Those would be the economic benefits, the money that flows into the company. And in that case, when you are paying for the electrician to come and install the electrical wiring, that's considered an asset that you've purchased. It's part of the acquisition costs of the building, right? So that is a couple of examples of how you can how you can meet the definition of an asset and what an asset entails. But I've also mentioned that in some cases what you might expect is an expense could essentially become an asset from an accounting point of view. And I hope this was interesting for you. I hope this was quite useful information for you. So now that you know what your assets are, you can actually start working on them, growing your assets, growing your balance sheet, and as a result, grow your company. My name is Jacques Taljaard. This is Practitioner Accounting Services, and I hope you have a very good weekend.